Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is May 29, 2017. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's take a look at market indices and the trend and some of the stocks. German DAX index still in a high level, pulled back a little bit last week. U.S. NASDAQ index is making the new high. This is a historical high. So U.S. market is really strong. The major indexes just keep making new high. S&P 500 making new high. Gold rebounded. Silver rebounded. Gold mining stock, ETF, consolidating here. Looks like it may try to touch the 200-day moving average again. Crude oil pullback. China-Asia market is trying to make this looks like a double bottom. So if the China-Asia market can break above this blue line, 31.19, let's say 31.20. If it can break above this, then the double bottom will form. Then the market has a potential to go up. However, the 50-day moving average will serve as a resistance. ETF, SXI, this is definitely good. They break out from this range. So semiconductor continue to go up, very strong index. Social media ETF, strong index going up. So if you buy this index, if you had bought it after it broke out from here, then you already made some money. But if you haven't, I'll show you other index you could buy now. NASDAQ, 3 times of technology index. This is also very high, but it's continue to go up. Let's take a look at each individual stocks. And the stocks, I added 2 new stocks which are breaking out within the buy range. Let's be clarified. The buy range means 5%, within 5% above the breakout pivotal point. So if the stocks hasn't gone up more than 5% after a breakout, that's a buy range. The 2 stocks are within buy range, newly added. The other stocks, we had it last week, they haven't gone anywhere, so they're still within the buy range. Now, Amazon and CGNX, I moved it out of the buy range. They went up too much, so they're now in the extended. So in this market, you can still hold on. You should hold on to the stocks that extended, but don't issue the new position because in case they pull back, then it's going to be really hard to hold on to this. So if you have any of the stocks in this extended list, just continue to hold on to them. It's fine. So let's take a look at the chart. ALGN, this is a biotech stock, medical supply, and it break out from this little flat base. And now it's in the buy range. You see the volume is very good as it break out. Same thing here. As it gap up, the volume is really high. And consolidate a little bit here around this gap up area and consolidate for 1 month. Now it continue to go up. So you can buy that one. If you don't have enough stock, you have a lot of cash, ALGN is one you may consider buying, but at your own risk. If I were to buy ALGN, I don't have any cash right now, so I probably would not buy this one because I'm fully in position already. But if I were to buy this stock, I would use this purple line, which is 20-day moving average 135, or a little bit below the here 135. Well, that is, use this as the stop. 134 is fine too at the low of this day. That's a stop order. So in case the stock go down, that means all this breakout is out of the window. It fell, so you have to sell. So stock is buyable and set the stop order. CC, this hasn't gone up too much, so still going up, still in the buy range. DLPH, and one of the buy point is here, 82, 10 cents above here, $83.05. And another buy point will be breakout from, the rebound from here. Right now, it's barely in the buy range. Dell Technology, DVMT, this broke out here above $68. So this is viable. Volume is kind of okay. So anyhow, this is a stock viable. UNVR, this stock has not gone up much yet, so within the buy range. Not a lot of stocks in the buy range. Most of the good stocks already gone up a lot. Let's take a look at the stocks that's extended, but they're still good. AAOI, very high now. And look at this volume. When they go up, volume is very high. So this is a strong stock. Sorry, AAOI. I lost my track. Anyhow, AAOI is a strong stock. Apple continue go up, strong stock. We have to be careful. If Apple fall below $149, then it's a sell because it would have made a lower highs if it came down. So if you were to take the profit off the table or partial profit off the table for Apple, that would be fine. Adobe, very extended. Adobe touched 50-day moving average. If you have watched this stock at this day, by the time it closed, it bounced back. It bounced away from the 50-day moving average. That would be a buy point. But now it's too late. It's gone up too much. Amazon gone up a lot, out of the buy range. And Alibaba is gone up too much too. Alibaba had a buy opportunity right here. On that day, suddenly it dropped, but by the time market closed, it's already closed on the high level. So that is a buy if you're watching the market during the day. But if you're not, that's fine. There are tons of other stocks. CGNX, uptrend. Facebook also in the uptrend. Well, recently, if you are watching this, you can get in here, should be fine. Google, too high. Google, the buy point is actually the gap up here. So for now, just hold on to it if you have it. If you don't, then look for other stocks and other ETF. Don't trace the high. Microsoft, uptrend. All these are good stocks. NVIDIA, uptrend. NVIDIA buy point is on the market open after release earning. Gap up. That's on market open. That is a buy point. Right now it's too high. NVIDIA and Applied Materials. Look at how strong this is. Applied Materials is a big indicator of the semiconductor. It's a number one semiconductor equipment company. So right now it's in a very decent uptrend. So the semiconductor is doing really good. Microtechnology uptrend as well. Recent buy point is when they bounce off from the 50-day moving average. Actually, this is about to break out from this range. If it can break out from this range, that's another buy point. Tesla, also uptrend. I mean, Tesla had a scare after earning a job, but has a tremendous support and push it back up. Viva, this is the most okay, what is this? Update. Okay, let's forget about that. Anyhow, Viva has a very huge up run here. This is a very nice up run. And I've been watching this stock for a while and had a little bit position. Of course, I wish I had more. I've been putting this stock on our newsletter for a while, so this is a very good stock. But after it ran up so much and in such a short period of time, I would take a partial profit out here, especially on Friday when they jump up like 8% in huge volume. I would take at least partial profit out of the table. So Viva is not a buy; it's a partial hold. Now I'd like to share with you about a performance chart. Basically, those are the multiple stocks and indices I would tell you. This green line is NVIDIA, and this is the last 365 days of the performance. So last year, NVIDIA, from a current day to the last 300 days, NVIDIA is the number one performance stock. It went up like more than 300%, 320%. Now, next one, this is semiconductor, which is 3 times of a semiconductor ETF. Ticker is SOXL, the first one, the red one, SOXL. And the third one is a technology, 3 times technology, which is the blue one, and 3 times technology, TECL. NVIDIA, the green one. And then next one is Alphabet, which is Google. Facebook is the next one. Then Alphabet is the last one. So they each, Facebook ran up 40%, Google 20-something percent. TECL, which is 3 times technology ETF, went up 76%. 3 times semiconductor ETF, SOXL, went up 200%, over 200%. The technology went up 110%. 3 times semiconductor, 265%. NVIDIA is 320%. So if you have the foresight to buy NVIDIA at the right time and hold on to it, then you are a big winner. You are the biggest winner. But if not, using the leverage ETF, you can still have a very decent gain in the account. 3 times semiconductor, 3 times technology ETF, both gone up pretty good. Now, the Googles, Facebooks, Apples, I didn't put Apple here. Those are also very good stocks. Amazon also very good. But just consider when you buy the ETF, you never have to worry about the earning report for one thing. Stock tend to go up a lot in earning report or go down a lot after earning report. So, but with the ETF, you're just sitting there for the ride. You don't have to. You take away the individual stock risk out of your portfolio. So that's a good thing about it. And leverage ETF does offer a very decent gain if you're holding on to the leverage ETF during the market uptrend. Okay. So that's the point. The point is what to do in this market, continue long the market. If you missed buy stock or you don't feel comfortable, hold on to the individual stock, just consider using ETF to long the market. You make same amount of money or even more, unless you have the ability to pick the best stock. If not, then just buy the ETF. That'll be all for this week. See you next week.